Namaskar Dosto. Welcome to a brand new era in India's financial journey. Today, on July 17, 2025, India is in the midst of a true crypto revolution, with digital currencies reshaping the way we think about money and opportunity. Over 120 million Indians have invested in cryptocurrencies, making India a global leader in crypto adoption and innovation, outpacing many developed nations. Bitcoin's meteoric rise, recently smashing past $120,000, has captured the nation's imagination, inspiring both seasoned investors and first-timers to jump in. Conversations are shifting from gold and property to digital assets, signaling a major change in how Indians view money, wealth, and investment for the future. The digital revolution, powered by affordable smartphones and widespread internet access, has opened up new financial avenues, especially for young and tech-savvy investors. Crypto is now seen as more than just a speculative bet. It's becoming an essential part of a future decentralized financial system, promising transparency and accessibility. In this video, we'll explore why so many Indians are embracing crypto, who these investors are, and what this massive shift means for the country's financial future. We'll break down digital assets, Bitcoin's record run, investor profiles, the evolving regulations, and the risks and rewards involved in this new landscape. So, let's dive in together and decode India's massive love affair with cryptocurrency and see what the future might hold for all of us. What is a cryptocurrency? You might have heard the term in the news or from friends, but what does it really mean? Simply put, it's digital money, decentralized and not controlled by any government or bank. Unlike traditional rupees or dollars, cryptocurrencies exist only online and are powered by technology. Cryptocurrencies run on blockchain technology, a public digital ledger where every transaction is recorded and secured by cryptography. This means your transactions are transparent, traceable, and protected from fraud. This system is distributed across thousands of computers worldwide, making it nearly impossible to tamper with or hack. No single person or company has control. Bitcoin, the first cryptocurrency, was created in 2009 and introduced the concept of mining, using computers to solve complex problems and earn new coins. This process helps keep the network secure and running smoothly. Like gold, Bitcoin's supply is limited, which adds to its value. Only 21 million Bitcoins will ever exist, making it scarce and often compared to precious metals. There are thousands of other cryptocurrencies, or altcoins, each with unique features and uses. Some focus on faster transactions, while others offer privacy or support smart contracts. Their value is set by supply and demand, and you can buy, sell, or hold them in digital wallets. These wallets keep your coins safe and accessible from anywhere. You can even use some to purchase goods and services, both online and at select stores, making them more practical every year. Understanding these basics is your first step into the world of digital finance. As cryptocurrencies grow, knowing how they work can help you make smarter decisions. Let's move on to why Bitcoin is making headlines in 2025 and what it could mean for your financial future. 2025 is shaping up to be a landmark year for Bitcoin, marking a new era in the world of digital finance and investments. For the first time ever, Bitcoin's price has soared past the $120,000 mark, smashing previous records and capturing the world's attention. This historic surge has reignited both global and Indian interest in crypto, sparking conversations from boardrooms to street corners. Since January, Bitcoin's value has grown by more than 20%, outpacing many traditional investments and drawing in new investors every day. Its returns are now rivaling those of tech giants like Nvidia and Microsoft, making it a serious contender in the investment world. The rally hasn't just been about Bitcoin. Ethereum and other major cryptocurrencies have also seen impressive gains, lifting the entire market. Even meme coins like Dogecoin are experiencing significant surges, adding excitement and diversity to the crypto landscape. FOMO is real. More Indians than ever are jumping in, viewing Bitcoin as a mainstream asset and a genuine part of their financial future, not just a tech experiment. Financial advisors across the country now field questions about digital assets daily as clients seek guidance on navigating this new landscape. News channels in India track Bitcoin's price movements with the same intensity as they do gold or stocks, reflecting its growing importance. For India's 120 million crypto investors, this boom is both a validation of their faith in digital assets and a tangible reward for their early adoption. The conversation has shifted dramatically. Crypto is now firmly part of the mainstream financial landscape, influencing decisions at every level. But what's really driving this unprecedented surge? Let's take a closer look at the global factors shaping this new chapter in crypto history. Bitcoin's 2025 surge is fueled by powerful global forces. The US government's pro-crypto stance, including a strategic reserve of digital assets, has boosted market confidence. The launch of Bitcoin ETFs worldwide has opened the doors for institutional investors and mainstream adoption. Technical events like the 2024 halving have reduced new Bitcoin supply, historically leading to price spikes. Massive short position liquidations have pushed prices even higher, giving bullish traders control. Market sentiment is now overwhelmingly positive, with some predicting Bitcoin could hit $150,000. These factors have created a self-reinforcing cycle of demand and price growth. The world is watching, and so is India. But who exactly are these Indian investors? India's crypto investors are more diverse than ever. Young, tech-savvy Indians still lead the charge, using apps like CoinDCX and CoinSwitch to invest easily. But now, high-net-worth individuals and family offices are joining in, seeing crypto as a strategic asset. The conversation has shifted from "should we invest?" to "how much and where?" Even businesses and startups are adopting crypto for cross-border payments and treasury management. Blockchain is being used for supply chain transparency and efficiency. This broad adoption adds legitimacy and utility to India's crypto ecosystem. Let's see how this new investment mindset is changing the game. Bitcoin is now seen as digital gold, a scarce, durable store of value for the digital age. Its limited supply of 21 million coins makes it attractive as a hedge against inflation and currency devaluation. Investors are shifting from short-term speculation to long-term holding, treating Bitcoin as a core part of diversified portfolios. Financial advisors now recommend small allocations to Bitcoin, just like gold. Bitcoin's global decentralized nature makes it appealing during economic uncertainty. It's easy to store and transfer, unlike physical gold. Digital wallets make access and portability simple for Indian investors. This new investment philosophy is driving India's crypto boom. But with opportunity comes responsibility. Let's talk about regulations. Crypto profits in India are taxed at a flat 30%, plus a 1% TDS on every sale. Losses can't be offset against other income or even other crypto gains. Cryptocurrencies aren't legal tender, but buying, selling, and holding them as assets is allowed. The government is expected to introduce a digital assets bill soon, which could clarify regulations and bring crypto under SEBI's supervision. Until then, investors operate in a legal gray area, facing regulatory uncertainty. The rules could change at any time, impacting the market. The RBI and government warn about crypto's volatility and risks. Staying informed about tax laws and regulations is crucial for every investor. Now, let's discuss how to stay safe in this fast-moving market. Crypto's biggest risk is volatility. Prices can soar or crash overnight. Only invest what you can afford to lose. This isn't a get-rich-quick scheme. Security threats are real. Exchanges and wallets can be hacked, and scams are everywhere. Use strong passwords, enable two-factor authentication, and stick to reputable, regulated exchanges. For large holdings, use a hardware wallet to keep your crypto offline and safe. Don't fall for hype or tips. Do your own research before investing. Limit your crypto exposure to 5–10% of your portfolio to manage risk. Diversification and discipline are key to surviving market swings. Stay vigilant and informed to protect your investments. Let's wrap up with a look at the future of crypto in India. Crypto is no longer fringe in India. It's a mainstream financial force. The journey to 120 million investors is driven by Bitcoin's performance, global trends, and a tech-savvy population. High-net-worth investors and businesses are maturing the ecosystem. The narrative has shifted from speculation to digital gold and portfolio diversification, but high taxes, regulatory uncertainty, and volatility remain challenges. The future depends on balanced regulation that protects investors and encourages innovation. Education and safe practices are essential for success in crypto. Diversify, use secure platforms, and never invest more than you can lose. India's crypto story is about a nation embracing change and new opportunities. With informed decisions and responsible innovation, the future is bright for crypto in India.